Welcome to this deep dive. Today, we're really digging into the New Jersey real estate market.
Yeah, specifically looking at the first half of 2025. What did it tell us?
Exactly. We've got insights from a key source, the New Jersey real estate market mid-2025 report.
And we're also pulling from other industry voices.
Yeah.
NJ Realtors, Newmark Research, Philadelphia Business Journal, stuff like that.
Right. So our mission here is to cut through all that data, pull out the really important nuggets,
About both homes and commercial property.
cross the whole Garden State, and basically get you up to speed fast. It's definitely been a period of, well, significant shifts.
It has. And what's really fascinating, I think, is watching the market move away from those really extreme conditions we saw
Yeah, the frenzy.
towards something maybe a bit more balanced. But this is key. It's not happening the same way everywhere.
Regional differences.
Big time. The sources really highlight that and how the state's kind of adapting on the fly.
Okay, so let's start with the big picture then. Statewide trends, January through June this year. What were the main themes?
Well, the data really points to a few things happening at once. You've got sales volumes sort of moderating,
Okay.
inventory noticeably rising,
hmm
but prices, they're still surprisingly resilient.
Resilient, yeah, that's a good word. It feels different, but still strong.
Exactly. And the numbers back that up. Statewide, the median sale price hit around, what, $547,500 in April?
Yeah, $547,500, and that's still up 7.4% compared to the year before. So, decent appreciation is still happening.
Right. Price gains are definitely still part of the story. But at the same time, the number of actual closed sales was down, about
Okay.
5.7% year over year in April.
So fewer homes actually changing hands?
Correct. And then you get to the supply side, and that's where things get really interesting. Active listings shot up,
How much?
hit 16,379 homes on the market in May. That's a jump of 24.1% compared to May 2024.
Wow, nearly a quarter more homes for sale.
And it was the 19th month in a row that inventory grew, so it's a sustained trend.
That's huge. So that must be easing things for buyers a bit.
It is. It's shifted the months of supply, basically how long it would take to sell everything currently listed. We went from maybe 2 months a year ago
Super tight.
to around 3.5, maybe touching 4 months by mid-2025. Just for context, the wider Mid-Atlantic region is around 2.8 months.
Okay, so NJ is loosening up faster than the region.
It seems so, yeah.
Yeah.
It's still leaning towards sellers compared to a truly balanced market, maybe, but that inventory growth is definitely easing the pressure.
But here's the twist, right? Homes aren't really sitting much longer.
That's the surprising part. Median days on market only ticked up slightly. It was about 35 days in April.
Which is only 2 days more than a year ago.
Exactly. So if a home is priced right, it's still moving relatively quickly despite more options out there.
So it's this weird mix. Prices climbing strongly, faster than the national average, actually.
Right. NJ up 7.4% year over year. Nationally, it was more like 1.8%.
Fewer homes selling overall, but listing prices are kind of stable. NJ median list price was about $575K in May, basically flat year over year.
It's a bit of a paradox, isn't it? Strong sold prices, stable list prices, fewer sales, more inventory, but quick sales for good listings.
So what's driving this? The reports must get into affordability, right?
Oh yeah, affordability is a massive piece of the puzzle. Interest rates were hovering around 6.5% mid-year,
Which really hits buying power.
significantly.
Hmm.
The sources mention figures like roughly 75% of U.S. households just can't afford a median-priced new home at these rates.
75%, that's stark.
It really is. But the sources also talk about this pool of pent-up demand.
People waiting in the wings.
Sort of. People who wanted to buy earlier but couldn't, or maybe they're hoping rates dip. Lawrence Yan over at NAR pointed out that national sales are still way below pre-pandemic levels, so there's likely demand waiting for the right conditions.
And the affordability crunch leads to more renting.
Exactly. That's a big consequence. New Jersey is apparently leading the nation in suburbs that have flipped to being majority renter households.
Really?
Yeah, the report mentions places like Harrison, Union City, up around 80% renters now. Just shows how these economic pressures are really reshaping where and how people live.
Okay, let's try and connect this back for someone listening. Statewide picture. Prices still climbing. Good if you own. Tough if you're buying.
Right.
Way more homes listed. That 24% jump is real breathing room for buyers.
Definitely more choice.
But don't expect deals necessarily, or for homes to just sit there. If it's priced well, it likely moves fast. So is it still a seller's market overall?
The reports seem to suggest it still leans towards sellers, yeah. Mostly because prices are still going up and homes aren't sitting forever.
Okay.
But that accelerating inventory, that's the big signal. Things are moving towards balance. The sources use phrases like cooling but healthy demand and a resilient pricing environment.
Captures that nuance.
I think so.
All right, now, as you said, New Jersey isn't just one market. The report breaks it down by regions: North, Central, South. The story changes quite a bit, right?
Absolutely. Let's zoom in there.
Okay, let's start up north. Bergen, Essex, Hudson, Passaic, Morris counties. Always the priciest part of the state. What did the first half of 25 look like there?
Still very competitive on the residential side. Single-family prices are, high, generally $600K to $800.
Wow.
Yeah, Bergen County's median listing was around $775K in April. The median sold price for the whole region in Q1 was about $620K.
And still appreciating strongly.
Solidly. Mid to high single digits, around 6.8% year over year for Q1.
And that demand, especially from NYC commuters, it hasn't really let up.
Not in the prime spots, no.
Yeah.
Commuters, professionals relocating. They're still driving demand, particularly in those desirable suburbs close to the city.
Things still selling fast.
Remarkably fast, often just 2 or 3 weeks. Multiple offers is still common.
Yeah.
The report actually mentioned Montclair. About 57% of listings there sold above the asking price this spring. So that tells you the competition is still fierce in those key areas.
Even with inventory improving statewide.
Yeah, inventory is better up north too, but it's still tighter compared to other parts of the state, more constrained.
Any specific areas that stood out in the north?
Well, Hudson County, Jersey City. Hoboken median listings around $620K, but Bergen County really jumped.
You mentioned that earlier.
Yeah, an 18.8% year-over-year increase in the median sale price in early 2025, up to around $760K.
That's huge growth.
Likely driven by a lot of activity at the higher end of the market there. Shows the strength in luxury.
Okay, switching gears to commercial property in North Jersey. The office market, always a bit tricky lately. How's it doing?
It's showing what the report calls selective stabilization. Vacancy in Q1 was still pretty high, 18.8%.
Ouch.
But it did tick down just a tiny bit from Q4. Leasing activity was okay in Q1, but maybe slower than last year. The big trend is this flight to quality.
Right, explain that again.
It just means companies are ditching older, less appealing office buildings
Gotcha.
and moving into newer renovated spaces,
Mhm.
especially ones with good amenities or near transit. So you see big companies renewing leases in prime spots.
While other buildings struggle.
Exactly. Availability, which includes sublease space like that big chunk Bank of America has on the market in Jersey City, is higher, around 24.3%. So it's really two markets. The new and shiny doing okay, the older stuff facing challenges.
And industrial, that's been the star performer everywhere, right?
Still a powerhouse, yeah. Maybe easing off its absolute peak, but still very strong. Vacancy in North and Central combined was about 5.9% in Q1.
Which is still low, historically speaking.
Very low. Below the 20-year average, even with all the new construction coming online. Net absorption was positive, more space leased than vacated.
Leasing activity is still strong.
Pretty strong, 6.6 million square feet in Q1. And rent growth is solid too, averaging around $17.70 per square foot, NN.
And NNN means?
Net, net, net. Tenant pays taxes, insurance, maintenance on top of rent.
Right.
In brand new, Class A space, that's pushing closer to $20, like $19.77 NNN.
Who's taking all this space?
A lot of it is 3PLs, third-party logistics firms and retailers. Also, international logistics companies, particularly from China apparently, were pretty active. Shows NJ's role in global trade.
Is vacancy creeping up anywhere?
It's inching up a bit near the port in Newark Elizabeth and down by Exit 8A, mainly because some big speculative buildings, ones built without tenants, signed up yet finished construction.
Ah, okay. So supply catching up slightly in those spots.
Yeah, but overall demand for modern warehouses near the ports and highways is still really robust.
How are investors looking at the north? Still keen.
Especially on industrial. New Jersey actually led the whole country in industrial sales volume in Q1 2025.
Wow.
Yeah. Cap rates, the return measure, have ticked up a bit because of interest rates, but the strong rent growth keeps values attractive. Retail is also getting another look, especially places with redevelopment potential.
Like adding apartments to malls.
Exactly. Sources say capital is definitely available, but investors are being selective. They like industrial, multifamily, and these value-add projects.
And there are some really big redevelopment projects happening, transforming places.
Yeah, the report highlights a few. Downtown Hackensack is undergoing a major revitalization. Multiple new apartment buildings, mixed-use projects, really changing the feel of the place.
And Garden State Plaza.
Right. That plan to turn parts of the mall into a mixed-use downtown with apartments, retail,
Yeah.
that's a huge shift for such an iconic mall.
Plus old industrial sites getting new life as warehouses.
Definitely. Like the old BASF campus in Mount Olive becoming a huge distribution center, or the former Nabisco factory in Fairlawn. These legacy sites are getting repurposed for today's logistics needs.
Even if there's sometimes local pushback.
Yeah, that happens, but the demand is strong. And transportation upgrades help too, if you connect it all. It shows North Jersey constantly reinventing itself, trying to balance housing needs and new commercial demands, despite the high costs.
Okay, let's move south a bit to central New Jersey. Middlesex, Monmouth, Union, Somerset, Mercer. What's the story there for the first half of 25?
Central Jersey's residential market saw more moderate growth, but still solid. Prices are kind of in between the north and south.
What kind of range are we talking?
Median single-family prices mostly in the $450K to $600K range. Middlesex County's median listing was $549K in April, up about 5.6% year over year. Closed sales here were actually up a bit, 3.6%.
So appreciation may be a little less intense than the north.
Generally, yeah. More in the mid-single digits, like 5.8% year over year, which many see as, more sustainable long-term.
Sales volumes.
Flat to slightly down overall. Buyers here seem a bit more price-sensitive than up north. But again, well-priced homes, they still sell pretty quickly.
And who's buying in central Jersey?
It's a real mix. Families, certainly. Professionals working in those growing sectors, pharma, healthcare, education, and retirees too.
You mentioned the eds and meds boom in New Brunswick.
Yeah, that's a huge driver. All the development around Rutgers and the hospitals creating jobs and attracting people. Inventory's expanding a bit, especially in new homes in the suburbs. But building permits overall are still kind of modest.
Renters trying to buy.
Definitely. Especially in that, say, $400K, $500 range. That's a busy segment.
Any specific towns stand out for price changes?
The report mentioned Bridgewater had a pretty big jump, like 23% year over year. Might have been playing catch-up. But mostly, it's steady appreciation.
Okay, what about commercial in central Jersey? What's driving that?
Very much anchored by those core industries. Pharma, healthcare, education. So there's strong demand for specialized office and particularly lab space.
Where specifically?
Areas like the Princeton Route 1 corridor, Metro Park, Edison. Similar to the north, it's bifurcated. The best office properties do well. Older ones struggle with vacancy due to hybrid work. But lab and R&D space, that's a major bright spot.
And New Brunswick is ground zero for a lot of that life science stuff.
Absolutely. It's transforming. There's the HEX Health Plus Life Science Exchange, huge facility, 574,000 square feet, coming online this year, mostly pre-leased already.
Wow.
And Nokia Bell Labs just broke ground on a big R&D tower nearby, bringing in 1,000 scientists. We're talking over $1.5 billion invested just in New Brunswick, creating this major innovation hub.
Then there's the other giant project, Netflix.
Yeah, Fort Monmouth. That's a game changer for the region. Netflix broke ground in May 2025. It's a $900 million production studio.
On the old Army base land.
Right. 12 sound stages, expected to open around 2027, 2028. Thousands of jobs, billions in economic impact. It's going to spur a lot of other development nearby, you'd think.
And is the infrastructure keeping up?
They're working on it. The Gateway Tunnel project helps commuters longer term, but more directly, the NJ Turnpike Authority has a big capital program, $3.1 billion for widening interchange upgrades by 2025-2026. That really helps Central Jersey's logistics and commuting.
So the big picture for Central.
It's really leveraging its location and these specific industry strengths, life science, film, logistics, to build its own strong identity. It's not just a commuter zone anymore. Huge investments are being made.
Okay, let's complete the tour down in South Jersey. Burlington, Camden, Gloucester, the shore counties. Historically more affordable, but the sources say it's seen strong growth too.
Definitely the most affordable region, yeah. Median single-family prices, generally mid-300K to low 400K. But you're right, serious momentum lately. Camden County's median sold price in April was around 374K.
And the growth rate.
Impressive, up 11.6% year over year. That's a double-digit jump.
And the shore, still hot.
Very hot. Shore towns in Cape May and Atlantic counties saw prices surge. Wildwood up over 20% year over year. North Wildwood saw something like a 50% spike.
50% must be some very high-end sales pulling that up.
Has to be, yeah.
Yeah.
Luxury new builds or major renovations. But it shows the region is really benefiting from people seeking relative affordability or second homes or maybe just a different lifestyle.
Is it as crazy competitive as the North?
Generally less so, but it has definitely tightened up. Inventory's better, but good homes still sell pretty quickly.
Who's moving there?
You get buyers priced out of Philly coming into Camden and Burlington counties, and retirees, maybe from North Jersey or out of state, looking towards Ocean or Atlantic counties,
Days on market.
a bit higher than statewide, maybe 40-plus days on average. So a slightly calmer pace, but still pretty active compared to, say, 5 years ago.
What kind of development is happening down south?
Seeing some urban housing and adaptive reuse projects in Camden, more 55-plus communities and townhomes going up in the suburban areas, and then luxury condos and rebuilds down on the shore, of course.
How's the commercial side looking in South Jersey? Office market?
It's smaller, obviously, but it was surprisingly stable in Q1. Occupancy actually went up to 85.1%.
Really? Against
Okay.
the trend.
Yeah, vacancy around 14.9%, which made it one of the healthier office markets in the Northeast, relatively speaking. It helps that there isn't a huge oversupply, and the tenant base is solid healthcare, government. Rents are holding near record highs, around $21.43 per square foot.
Cheaper than Philly, maybe?
Could potentially attract some tenants looking for value, yeah.
And industrial down south. The sources mentioned higher vacancy there.
They did. Vacancy was higher, maybe 11, 12% in Q1. That's mostly because some really big spec warehouses finished construction recently, especially out in Salem County near the new Windport. Vacancy there spiked to like 37.6%.
Wow, so supply got ahead of demand there for a bit.
Looks like it. But the thinking is those huge spaces will fill up over time as companies need large-scale distribution hubs. Rents are rising, though still cheaper than the North, maybe mid-single digits to low teens NNN. But the key takeaway from the sources is that South Jersey industrial has momentum. Rent growth was among the highest nationally last year. Developers are clearly betting big on its logistics future.
And retail. Any interesting trends?
Similar themes. Malls like Moorestown looking at adding apartments, neighborhood centers doing well, Atlantic City trying to diversify with non-gaming attractions like that big water park.
It really sounds like South Jersey, maybe sometimes overlooked, is having a bit of a moment, especially with some huge projects coming online.
It really feels that way. Camden's waterfront and downtown are seeing transformative investment. That Walter Rand Transportation Center redevelopment, planning a 25-story office tower.
The Beacon Building.
Yeah, 500,000 square feet. Set to break ground late this year. That'd be the tallest building in South Jersey. It's a huge statement of confidence. Plus more residential and retail planned for the waterfront, backed by big infrastructure money.
Meet other drivers.
Rowan University and Rutgers County expansions help. Healthcare growth supports medical office demand. And then there's the big state project.
The Windport.
Right. The New Jersey Windport in Salem County. Over $500 million. It's designed to support the offshore wind industry and attract related manufacturing and warehousing. Plus, the South Jersey Port Corporation is upgrading terminals in Camden and Paulsboro.
So, connecting the dots for South Jersey.
It seems to be leveraging its affordability, its available land, and these major new infrastructure investments to attract businesses and residents, potentially shifting perceptions and drawing growth from both inside and outside the state.
Okay, so let's pull all this together. North, Central, South. We've looked at the first half of 2025. What's the overall takeaway for New Jersey real estate moving forward?
I think the main point is that the market is still dynamic, still fundamentally healthy, but it's definitely in a normalization phase, moving away from the extreme.
Prices still went up everywhere, though.
They did. Residential prices appreciated in all regions. South Jersey actually led in percentage growth because its starting point was lower than the North, than Central.
And that rising inventory, that's the big news for buyers, right?
Absolutely. That statewide jump, over 24%, gives buyers way more options, more breathing room than they've had in years.
But sales are down slightly, homes taking a few extra days to sell.
Right. It's the market adjusting, finding a new equilibrium, and the sources really emphasize, for sellers, this means pricing correctly is absolutely critical now. Overprice it, and it'll likely sit.
In the commercial side, wrap up.
Very much depends on the sector.
Yeah.
Industrial. Still a powerhouse.
Yeah.
Logistics, e-commerce driving it, strong rents, low vacancy in prime spots despite new builds.
Office.
Still bifurcated. Flight to quality is the name of the game. High demand for the best spaces, high vacancy in older buildings.
Retail and mixed use.
Finding new energy through redevelopment and repurposing.
That theme of repurposing old malls, old bases, old factories really runs through the whole state's story, doesn't it?
It absolutely does. Developers, investors, They're actively reimagining properties to meet today's needs, and the construction numbers back that up. $57.6 billion projected in starts for 2025-26. That's a big number. Includes infrastructure, too.
How's NJ looking compared to the rest of the country?
Still ahead on price growth compared to the national median. Inventory recovery is maybe a touch slower than the U.S. average. NJ was up 24%, U.S. up closer to 31.5% in May.
Why the resilience here?
Probably the state's diverse economy, density, land constraints, helps values hold up better than some other places.
So, crystal ball time. Second half of 2025. What are the forecasts saying?
Given where mortgage rates are and just general economic uncertainty, the expectation seems to be for the market to kind of flatten out a bit. Forecasts are calling for maybe modest price growth for the full year 2025.
Like what kind of numbers?
Maybe 2–4% overall for the year. You know, a far cry from the double-digit jumps we got used to, much more moderate.
So for you listening, especially if you work in this market, what are the practical takeaways or opportunities from all this regional detail?
Well, the report suggests tailoring your approach. Up north, you got to emphasize competitive pricing, prepping listings really well, because buyers have more choices. Central Jersey, leverage all that commercial buzz, the Netflix studio, the life sciences boom. Highlight the communities benefiting from that growth, like New Brunswick or Fort Monmouth.
And down south.
Really hammer home the affordability advantage. Plus, all the new amenities and jobs coming from things like the Camden revitalization and the wind port attract buyers who maybe hadn't considered South Jersey before.
And seeing those visuals, we talked about the statewide numbers, that regional appreciation chart, it really clarifies things. You can see South Jersey's percentage lead, even though the dollar values are lower.
Exactly. The data paints a picture of varied movement, but overall positive, just normalizing.
So we've gone from that superheated market to one that's, well, still warm, maybe, but breathing a little easier, more balanced.
Yeah, and what's really fascinating to me now is how the story isn't just about prices and inventory anymore. It's so tied into how land is being physically reshaped.
Right, the redevelopment.
How whole new industries like offshore wind, film production, life sciences are popping up and driving growth in specific areas, and how these big infrastructure bets are setting the stage for what comes next. And thinking about that, this wave of transformation, maybe consider how the rise of these new sectors, often in places you wouldn't traditionally expect, is fundamentally changing the types of communities and opportunities across New Jersey. It's not just about the usual suburbs or urban centers anymore, which, you know, it raises an important question for the future. As these new industries really take root and grow, where might the next big wave of real estate transformation happen in the state?
That is a really interesting thought to chew on. Where indeed?
Well, thank you for joining us for this deep dive into the New Jersey real estate market. Hopefully digging into these sources has given you some valuable perspective.
Absolutely. Keep watching those trends, everyone. They're definitely still evolving.